How is going, everyone? Traders, today we are diving into exciting and powerful strategy, the 9 AM CRT model. This strategy is designed to help you find high probability trade setups during the 9 AM session. We'll break down each key step, making it simple to understand and implement in your trading. So, let's get started. Step 1. Identify your daily bias. The first step is to figure out your daily bias. Are you bullish or bearish for the day? This decision will set the goal for your trades. You want to align your CRT with the overall market direction. A good practice is to analyze higher time frames like the daily or 4-hour chart to establish whether you're looking for buying or selling opportunities. Step 2. Find the key level for your 9 AM CRT. Once you've determined your bias, locate a key level where you expect price action to react. This could be a strong order block, breaker, FVG, an old high-low, or even a significant price level from previous trading sessions. Your 9 AM CRT should be around this key level. Remember, as we are using hourly chart for our 9 AM CRT model, so our key level should come from the 4-hour or daily chart. Remember, we have discussed about divided by 4 rule in the first video, so if you're a beginner or new to this channel, you have to watch my first detailed video about candle range theory. The link is in the top left corner, and also I will recommend it to watch my 5 AM CRT model video. Also, let's move on to the lecture. The key level will provide you with an opportunity to trade off a reaction from that point. Step 3. Analyze the hourly chart and wait for the 8 AM candle close. When you determined your daily bias and higher time frame key level, now shift your focus to the hourly chart. We are looking for the 8 AM candle to close. This candle will help define the ranges of our 9 AM model. Waiting for this close ensures you are trading with confirmed information rather than speculation. Step 4. Mark the high and low of the 8 AM candle as CRT range. Once the 8 AM candle has closed, mark both its high and low as the CRT range. These levels act as important boundaries that we will use to evaluate possible trade entries. The price could either break out or react within this range, and we'll be prepared for both scenarios. Step 5. Move to the 15-minute chart to identify the lower time frame CRT. After defining the 8 AM CRT range, switch to the 15-minute chart. Here we'll look for our lower time frame CRT. This gives us a more precise view of the market and helps in identifying the short-term opportunities for entry, as well as it increases the chance of high probability trade. As we discussed in our previous video, that lower time frame CRT is a confirmational tool. Step 6. Look for the 15-minute CRT purge in between 9 AM to 10:30 AM. During the 9 AM to 10:30 AM period, look for a CRT purge on the 15-minute chart. This is when price takes liquidity, often creating false breakouts or sharp price movements. The purge helps to eliminate weak positions, leaving stronger market players in control. This is your signal that the real move may be about to happen, and if the purge occurs outside the time window, which is 9 AM to 10:30 AM, New York local time, then there is no trade. Listen guys, you have to establish your own trading rules and stick to them consistently. Every trade, whether a win or a loss, should be recorded in a journal. If you experience a loss, make sure to note it down and avoid repeating the same mistake. For winning trades, focus on replicating that success, and if you miss an opportunity, be ready to catch it next time. Step 7. Mark the 15-minute CRT high-low as lower time frame CRT range. After the purge occurs, identify the high and low of the 15-minute CRT candle and use them as your lower time frame CRT range. This gives you a shorter term range to work with, allowing for more precise trade execution based on recent market structure. Step 8. Zoom into a lower time frame for entry, 5, 3, or 1 minute. For your entry, zoom into the 5-minute, 3-minute, or even the 1-minute time frame. These lower time frames allow you to get in at the most optimal point, reducing your risk while increasing your potential reward. The goal here is to catch the shift in price momentum as it reacts to your CRT range. Step 9. Wait for market structure shift or change in state of delivery, CSD. Lastly, be patient and wait for a market structure shift or a change in the state of delivery, CSD. This is a crucial confirmation that the market is ready to move in your favor. Once you see this shift, it's your indicator to execute your trade with confidence. And that's how you apply the 9 AM CRT model in your trading strategy. These are some key points that I have already explained, and it's important to follow them strictly. Now let's move on and look at some live examples on the chart. So let's dive into the live charts. So, in our first example, we are on the Euro USD daily chart. We run through some nice relative equal highs, and after taking these highs, price rejected and also price sweeps the previous day high and rejected, so we expect prices lower and we will be bearish for the next day. So here our first step is completed and bias are bearish. So we move to our next step, which is key level. So we hop onto the 4-hour chart and look for a key level. Here you can see we sweep some buy stops and price shows willingness to drop to the downside. Market shows displacement towards the downside, creating this high probability order block. Why is this high probability? Because it takes buy stops and shows displacement to the downside. So we mark out this order block. So our step 2 is completed. Next we move on to the hourly chart and wait for the 8 AM CRT candle to close. Here we are on the hourly chart and you can see the 8 AM candle closes. So our step 3 is completed. Move on to our fourth step, which is to mark out the high and low of the 8 AM hourly candle as the CRT range. So we mark out the 8 AM candle's high and low. Step 4 is also completed. Now we hop onto the 15-minute chart to look for a lower time frame CRT at or around the 8 AM candle high-low. So we are on the 15-minute chart and we will wait to sweep the high of the 8 AM candle and form a lower time CRT on the 15-minute. Price sweeps the candle and closes inside. We mark out the high and low of this candle as a 15-minute CRT range. Here step 5 is completed. Finally, we hop onto the lower time frame 1 minute for our entry. On the 1 minute you can see price creates turtle soup above that high within our time window, 9 AM to 10:30 AM, and our step 6 is completed. Remember, if the purge turtle soup occurs outside the time window, then there is no trade and wait for the next day. Or if you are using more than one pair, then you can find your setup on the other pairs. So here we are on the 1 minute time frame, and we will wait and look for a displacement to the downside and look for a market structure shift or change in the state of delivery. Here you can notice price drops down and the market has made a change in the state of delivery and created a high probability order block, so we mark out that order block and wait for it to retrace back to that order block. So price retraces back to that OB, and now we enter a short position, just putting the stop above that swing high and targeting the 15-minute CRT low, and our final target is the 8 AM CRT low. So let's see what happens next, and here we go, and you can see how the market is manipulating to the downside to reach our final target. Price is continuously declining to the 8 AM CRT low, and finally reached to our target. The 9 AM model is a simple, high-probability setup designed to offer very high risk-to-reward trades. It works by catching key price shifts around 9 AM, making it effective for consistent profits, as shown in this example. So let's move on to our next example of Euro versus Canadian dollar. So here we are on the daily chart. Pause the video and notice what happens here. For those who didn't pause the video, they are doing wrong with themselves. Here you can notice prices take out some buy stops and show an aggressive move towards the downside, creating a fair value gap here, and hit an order block and price respected the order block, and retraced back to the FVG, and the FVG also got respected. So we are expecting prices lower and we are bearish for the next day. We will be sellers above the next day's opening. So let's hop on to the 4-hour chart to find out some key levels. We are on the 4-hour chart, and after taking these buy stops, price shows displacement to the downside and then retraces a little bit. Here we have a gap, and also we have a breaker block aligning with the daily FVG, so we mark out that breaker block. Next, we switch to the hourly chart and wait for the 8 AM candle to close. We are on the hourly chart, and the 8 AM candle is already printed. Let's mark the high and low of that candle as our CRT range. We marked out the high and low, and next, hop on to the 15-minute chart. On the 15-minute chart, we will wait and look for a lower time frame CRT to form. Let's see what happens next. You can see price creates a turtle soup above the old candle's high and closes inside, so we mark the high and low of that candle as a 15-minute CRT range. Finally, drop down to the 1-minute chart to look for our entry. Pause the video and look at what happens here and tell me in the comments. You can see the market creates this turtle soup first and then moves higher, and we didn't consider it as a valid turtle soup. Why? Think about it. Because this turtle soup occurs outside our time window, and that's why price runs through it. And price creates another one here, and this is valid because this turtle soup occurs within our time window, between 9 a.m. to 10:30 a.m. We wait for a change in state of delivery to the downside. Let's see what happens next. You can see price shows displacement to the downside, and here we have a change in state of delivery by creating this order block, so we mark it out. And wait until prices retrace back to that order block, and then we enter. Price finally retraces back to our zone, so we enter as a short position, just putting our stop loss just above that swing high and targeting the 15-minute CRT low, and the final target is the 8 a.m. CRT low. So let's see how it plays. And you can see we hit our first target, which is the 15-minute CRT low. Let's see what price does next. And finally, guys, you can notice prices reach our final target by offering a 3+ RR trade. So finally, guys, we move on to our last and final example of gold. We are on the daily chart, and we are in a bullish trend, and we tapped into a fair value gap, and the fair value gap got respected, so we expect prices higher, and we are bullish for the next day. Let's hop on to the 4-hour chart. We are on the 4-hour chart now. Price respects the daily fair value gap. Let's see what happens next. Price shows an aggressive upward move and creates a fair value gap, so we mark out that fair value gap and switch to the hourly chart. We are on the 1-hour chart, and we also mark the 4-hour fair value gap, and we wait for the 8 a.m. candle to close. Price retraces back to that fair value gap, and the 8 a.m. candle closes, and price respects the fair value gap. So we mark out the high and low of that candle as our 8 a.m. CRT range. Next, we drop down to the 15-minute chart to look for a lower time frame CRT at the low of the 8 a.m. candle. So let's see what happens next. You can notice price runs through the low and closes inside the range, and now we also have a 15-minute CRT, so we mark the high and low of that CRT as a lower time frame CRT within a higher time frame CRT. Guys, let's drop down to the 1-minute chart to look for our entry. Here we are on the 1-minute chart, and you can see price takes that low and creates a turtle soup and then moves upward, creating a change in state of delivery and creating a higher probability order block, so we mark out that order block. Okay, here is a hint for you guys. If, on the lower time frame, price creates a heavy up or down close candle, you guys can mark the consequent encroachment, the midpoint of that candle, to reduce your stop loss. And we already marked that level here, so we wait to retrace back to that level. Let's see what happens next. And guys, you can see price hit our zone, so we enter as a long position, and our stop loss is just below that swing point, and we will target the 15-minute CRT high, and our final target is the 8 a.m. CRT high, so let's see how it plays. Here we go. Our first target hit, so we wait for our final target. Let's see what happens next. And you guys check how price hit our final target. So, we have covered all the steps for our 9 a.m. model, and if you have any questions or didn't understand something, just ask in the comments and I'll help you out. Make sure to join my Telegram channel for more tips and updates. The link is in the description. Good luck traders, and see you in next video.